Well, mining giant Rio Tinto expects the Chinese economy to recover in the second half of this year, which will improve the outlook of Australia's resources industry. Joining me now is business reporter Edward Boyd. Ed, Rio Tinto expects the Chinese government to continue providing stimulus to the world's second largest economy, which will improve China's struggling infrastructure sector, right?
Well, that's the whole point. So China's policymakers have been providing stimulus to the world's second largest economy. It has been struggling a bit over the past sort of 18 to 24 months, and it's obviously had an impact on our resources sector, which obviously sells a lot of iron ore to the Chinese economy, which is turned into steel for construction, for infrastructure, building roads, rail. So Rio Tinto is obviously one of the world's largest iron ore mining companies, and today they put out their annual production report, and they actually shipped the second largest amount of iron ore on record in the 12-month period last year, about 332 million tonnes of iron ore. The iron ore price has actually touched $145 a tonne at the start of this year, so just less than 2 weeks ago. And it's come off a little bit, but it is actually at quite high levels, which is good news for the federal budget when it comes out in May, because in the budget, you have iron ore priced in at roughly $65 a tonne. It's currently at about $137 a tonne, so more than double what the budget forecast is. So that's going to be good news for Australia's revenue. Obviously, Rio Tinto is one of the biggest producers. We're going to get the production report from BHP in the next couple of days as well. And obviously their profit results will come out in February. So we'll get a sense of just how much money they've been making out of the iron ore business in the past 12 months in just a few weeks' time.
Ed, can you just talk us through the latest consumer confidence numbers? It's showing sentiment remained pretty steady in January.
Yeah, this is the latest figures from ANZ Roy Morgan. It's a weekly survey that they put out. And we can put up the first chart just showing how confidence has actually lifted at the start of this year. And it has been flat in the past week. But you can see there, the chart goes back to 2014. There's a lot of big fall there around 2020. And it's slowly been bouncing around a bit in 2022, 2023. Now, the start of 2024, confidence is starting to go back up again. It's still well below the average since 1990. But if we go to the next page, you can see here, this is the average of consumer confidence by housing cohorts. You can see people that own a home, paying off a home and renting properties. The renters are still not feeling too confident, but the other two categories, confidence is on the way back up. And that's really all due to the fact that interest rates are likely to come down at some point this year. They're being priced in to fall in August in Australia. Obviously, the cash rate's at 4.35%. With interest rates falling from the Reserve Bank, that's going to add confidence to the housing sector. It's going to add confidence to people that own a home or are looking to buy a home because they'll be able to borrow more money. But the fact is inflation, it's still too high. We did see the numbers come out last week showing monthly inflation in November was 4.3%, which is lower than expected, but it's still got a long way to go before it's between that 2% and 3% target band that the Reserve Bank's looking for. Holly.
Okay, Ed, thank you for the update.